Welcome to another episode of the CattleUSA Daily Podcast. Today we are welcoming back Dan Gerhold with the CattleUSA Insurance team. And today we are talking the commodities markets, what is going on in the world of commodities and just in the cattle market in general right now. Dan breaks down the things that have happened over the past week, and then we touch on the next couple months. What can we kind of expect out of the cattle market over the next few months, and what are Dan's thoughts and opinions on that? So without further ado, let's go ahead and jump into this podcast episode with Dan. But before we do, if you guys could take half a second to go like, subscribe, rate, and review this podcast, we really appreciate it here at the team. It helps us continue to grow, reach more producers, and make a wider impact on this amazing industry that is the cattle industry. So let's go ahead and hop into this episode with Dan. Dan, welcome back to the podcast. How is life in Iowa?
It's great. Can't beat this weather. I mean, it's a cool 70 degrees, dry. Silage season is beginning. Life is great.
Now, I'm going to need to take a second here for all of our audio listeners. Dan has showed up today with a new facial cut. No new shirt today, no new cash cow anything, but new facial hair. And Dan, I hear something about your kids outweighed your wife on this decision, and that is why we now have some pretty extreme facial hair.
Put it to a vote, and she got outnumbered. I just got to thinking to go along with that, Lauren. You look at our cattle market, our environment, everything goes back to the 70s. I mean, mustaches are back. The gals are all wearing baggy bell-bottom type pants. Cattle market, high inflation. The 70s were rocking very similar. I think we've just gone back in time. So it fits right in.
You're just bringing it back. You're bringing it back and going along with everything else. You're like, hey, I'm just matching the cattle market here. So it's perfect.
Absolutely. 100%. Yeah. Well,
beautiful.
Give the people what they want. Absolutely.
I love it. Well, speaking of the cattle market, what is going on in the world of commodities right now?
Up and away. The general consensus, once again, has not changed. It's pretty remarkable. We had a screwworm scare Sunday when the news came out that we had a confirmed case of screwworm in a human over in, I believe it was Maryland. So that gave the market a tiny little shock first thing Monday morning, but turned right around and went back higher and set some new highs. Here yesterday, both feeders and fats, all-time record highs. Charts are strong. Open interest is up. Kill numbers are a lot stronger than what they were last week, the week before, the month prior. So got boxes rocking. Obviously, Labor Day this weekend, so probably a little bit of last-minute buys in the spot market there. So that's all encouraging, but, I haven't seen a reason to fight the trend yet. We've got deferred money up above 240, so looking out that far on the fat cattle and starting to hedge. Also looking at the deferreds on feeder cattle for particularly cow-calf producers stepping out to next year, starting to layer in that protection, get 25-30% of the calves covered. It's just no telling anybody's guess when this thing ends. Right now we're rocking in the 70s and let her rip.
Yes, we absolutely are. Let her go, let her run. And you know what? If it's going to be the 70s, you might as well take it full blown like Dan did and bring it all back and
absolutely
ride the wave while we can.
Every bit of it. If we could get the vehicles to go back to those days too, that'd be great.
No, I really like my backup camera. Not gonna lie.
You could put that on an old Dodge Charger or you could add it on.
I could.
You bet. No, it's everything points higher. I mean, even the hogs are getting a bounce here. It was good to see those bounce yesterday. That gives me a little bit of faith that we can make a counter seasonal move into the fall and winter time. Numbers are short. They cut the kills on hogs too. Once again, are they cutting kills because the hogs aren't there, or are they cutting kills to maintain margins? Could be a little bit of both. There's obviously some disease pressure in that market. So overall, rising tide lifts all boats. If beef is going to be above 400, we should see the pork cutout stay above 100 pretty easily. Same with chicken. Chicken's not cheap either right now, but inevitably beef is still the highest price protein available to the consumer. But so far the consumer's shrugging it off. Got to celebrate that every time. I I can be concerned and get in a bad mood, but right now we're moving the product and life is great. So as long as the consumer keeps going to the grocery store and buying those steaks and roasts, and I think we're going to be okay. So it's very, very common to see that dip once you get past Labor Day. So don't be surprised. But inevitably, 2 months from now, we're going to find out what the holiday demand looks like. So we get out to there, I think we'll have a sign of whether or not beef is too high or not. Right now,
Yeah.
full steam ahead.
Yeah, 100%. What are your thoughts going into the next few months?
Same thing, if you see a box of slip, it wouldn't surprise me if they slip back to that 380, 385 in the choice. Just a normal seasonal slowdown as people get back to school and they switch to casserole mode, roast mode. You're not going to see really, really super strong grilling demand. So 385, 390, you hold that level. Still optimistic as we come back into holiday season. We could push back above $400 boxes again. As I mentioned, if it slips more than that, I think then we truly know we cut into the consumer too hard. So then we should see the volume slow down. Once again, the Packers will probably cut the kill. As far as numbers, there's no wall of cattle that I'm looking at in the near future. I mean, Cattle on Feed last Friday once again proved it that we're killing more, we're slaughtering more cattle than what we're placing. Mexico's still shut down. The calves just aren't there. So the other thing I'm seeing, sale barns are all telling me the same thing. We're moving these cattle early. We're moving them light. Guys don't want to miss the market. It could be a tighter fall when it comes to supplies of feeders available to get placed. So overall, watching the index just rip into the end of August, usually this thing is starting to roll over because you're seeing plenty of guys pull yearlings off grass and available numbers go up. But not seeing it, just keeps going higher and higher. Buddy's guess, I mean, I think I sent a message to one of the winter guys that I think I'm going to sit on my hands here instead of buying yearlings at 8 weights at 380. I might just pause and see how this all shakes out. And they're like, well, don't sit too long. You'll be buying 9 weights at $4. I mean, it's anybody's guess. I think he was joking, but it's certainly possible it could get that high. It's just truly a supply and demand market right now with cheap feeds and the profitability in the feedlots. It's full steam ahead for those guys. Let's get filled right back up, even though prices are setting new records every week. So, it's a great day to be a cow calf man. It's a great day to be a backgrounder. Even guys selling, market ready fats right now, they're just making a killing. That's going to change, obviously someday. A little bit concerned that the yearlings we are buying right now come with 240 break evens for fed and beyond. We're gonna need some strong beef demand domestically to justify and see a return on those cattle. So that's a little bit concerning, but overall, like I said, there's no wall of cattle coming at us to be overly concerned about.
Yeah. What else do we need to hit on today? Is there anything else going on in the market that we should be touching on today?
Powell came out and said he's open to lowering interest rates. I'm going to guess that he's probably going to notch them down, 0.25%. It's high time, in my opinion. We're seeing everything kind of slow down as far as housing, construction, whatnot. It'd be a good thing. What that does to cattle is a good question. I'm surprised cattle have held in with this high inflation, but yet high interest rates this long. So I wouldn't be surprised if managed money does a little bit of pivoting based on that, but we're not going to find that out for another month. So other than that, yeah, keep an eye on stocks. Cattle like to move with stocks, and historically speaking, September, October is not a friendly month for equities. So once again, back to school, just just normal slump of September. So not a big deal.
Well, if that's everything that we hit on today, Dan, I appreciate it. Appreciate your time. And as always, to all of our listeners out there, if you love today's podcast, make sure that you are liking, subscribing, rating, reviewing. We appreciate all of those things. And if you are interested in learning more about LRP rates, insurance, getting yourself covered, make sure you check out the show notes down below where we have that CattleUSA insurance link where we partner with Dan and his team to provide those LRPs for you guys. So make sure you head down there. You can get a hold of the team and they're there to answer any questions you might have on what that looks like right now, because it can be a little confusing if you just go look up LRP rates right now and don't have the full story, have it all explained to you. So make sure you go check out that link down below, and we will see you all tomorrow on another episode. Have a good one, y'all.